How's it hanging? Today's Wednesday, July 9th. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I kept a little bit of NVIDIA short, honestly, against my better judgment, and I put on some SPY August 545 puts that are lotto-ish. Let's talk about it all. All right, so the market was up pretty big today, up 0.6% for the SPYs. Qs are up 0.75%. The IWM is up over 1% today, 1.2%. Just a monster day. TLT bounced back, so any bearish concerns that you may have in regards to rising interest rates from yesterday morning are pretty much out the window. Gold is green a little bit. Bitcoin really rallied, especially into the close. Bitcoin up, as I'm talking right now, 2.3%. The IBIT ETF. So pretty strong day for risk assets today. It was a really strong day for the market. It was an interesting day for the market when you look at this 5-minute chart. We gapped up above the inside day high, and right off the open we had sick momentum continuation. We got hit down really hard here on no headline to break the opening low, almost fully fill the gap. Thought that this price action was very interesting. And then from there we just went into this upside grind that was working us back towards highs when the market actually closed. Recapping from the morning meeting, we discussed in the morning meeting the importance of yesterday's inside day. Markets work in periods of expansion and consolidation over time. Yesterday represented really the last 2 trading sessions, because 2 days ago was a price correction. Yesterday was a time correction. So yesterday really represented a, albeit fairly brief, period of market kind of contraction that can set you up for expansion. So the question in the morning meeting today was, is the low from 2 trading sessions ago, which the ADMA is now above, the pivot low of our uptrend and we're just going to continue from there? Or does this market, which went so far so fast from the June 24th breakout, require a little bit of a deeper price correction to just digest how big that upside move was? And what I kind of leaned towards in the morning meeting today was, with the vol control bid that we're still expecting, the systematic bid plus the positive gamma that's underneath the market, I actually think it's more likely that 2 days ago just ends up being the pivot low for continuation. So we got the inside and up, and that's it. You know, the market here looks fantastic. There was a brief period when we had that momentum move in the beginning of the day and then rolled down and almost filled the gap, where if we could have closed down where we were trading at 11.15, it could have given us a pretty different, or let alone even worse, it could have given us a pretty different daily chart picture, where it almost could have looked like a little bit of a lower high that's setting us up for a deeper price correction. But again, the rally into the close kind of gets rid of those fears. So the market here is just looking fantastic. There's nothing else to say about it. I did think that price action on that sell-off was pretty interesting, especially when you combine it with 2 trading sessions ago. We were expecting a pretty big vol control bid, and we actually closed red on the day. Granted, there was a bunch of human VVIX tariff-related headlines that were coming out on that trading session that enabled us to overwhelm the systematic bid. But I did think that was particularly interesting if we could have closed weak, but we didn't. So, you know, the market looks incredible. The price action from 2 trading sessions ago, plus that sell-off that we had today, just really has me itching and has my trigger finger wanting to short this market. But I'm trying to hold myself back as much as I can, because I just recognize that it probably is still too early, as here it is on July 9th. We're still in this super bullish seasonal period. There's still a massive bid underneath this market. I think that we kind of have to get to like at least, my original thought process is probably still my thought process unless the technical picture changes, at least another week from now, or probably the end of next week, to see any potential weakness be able to come into this market. And that's still early. It might still be more like a August to September story on weakness. But, you know, starting to think a little bit further about a concept I brought up the other day, which I just don't know if it matters or not. I think that the vol control bid has been front run. And I think that is some of the buying that we saw in the end of June was front running this systematic bid. I know I said this on another meeting. I don't remember if it was a morning meeting or afternoon meeting somewhat recently, but I've never seen such a chatted about systematic bid before, right? Like we're always paying attention to these market dynamics, but it seems like everybody's been talking about the vol control bid, and they're starting to learn about that, and maybe that means it's getting front run. But thinking about it, if it did get front run, does it matter? Because they still have to buy. So maybe is that something that we've been hearing, Brant? I really don't watch CNBC.
I get on the 504.
Maybe. Wow.
What's up? You get off?
Maybe the systematic bid is front run, but it still has to buy, right? So maybe that means that the people that front run it are going to sell a little bit over the course of this month, and it doesn't make us go up as much as we would have otherwise. But the buying is still there, and that at a minimum should hold us back from really being able to sell. But I have thought that the price action over the course of these last few trading sessions was interesting because it almost should have been more bullish. Now we are expecting a large vol control bid to resume tomorrow. I think that there's a really, really big roll-off from, I think it's from April 9th, which was the day of the original tariff pause happened. It's like the biggest up day in history or whatever. I think that rolls off, I think, for tomorrow, so it should create a huge systematic bid tomorrow. So it'll be interesting to see tomorrow's price action. And it's like, do you really want to short in front of that? And sort of, even what I was saying, like I was shorting this NVIDIA. I thought that the NVIDIA price action was kind of bizarre. It was not running with the market, like it was holding it down. I had been short off this like 163 resistance. I got stopped out on the 1520 candle here when it broke up for a small loss. And then it came right back down, and I was like, oh man, did I get shaken out? And then at 10 of 4, at 350, I saw NVIDIA come in with a buy imbalance that was like 2.5 million shares to buy or something like that. And that it bounced, but immediately tailed right back down. And then I was like, I'm gonna short some and just keep a little bit, just because there's a seller here. I got shaken out, but even in the face of over 2 million shares to buy on the MOC, they still tailed this thing right back down. It's like, I'm just gonna keep a little bit. But at the same time, as I'm doing that, I'm like, do I really want to be putting on a new short? And it's not massively sizable, but do I really want to be putting on a new short right in front of tomorrow, when we're expecting just tomorrow to be an insanely big vol control buy day because it's rolling off the biggest up day that has almost ever happened in the market? Probably not. So I could be easily making a mistake on that, but I don't know. I want to really continue to watch this price action closely, which I always do no matter what, but I want to really watch this price action closely because I thought that this sell here was interesting. I thought that the price action from a couple days ago was interesting, and it'll be interesting to see what happens tomorrow. We'll get more data on that tomorrow morning for our morning meeting, like we typically have. But I want to know tomorrow morning like what that number is expected to be for tomorrow. I'm really curious. And then given that I want to see how the market reacts. Is there any chance that we don't go to new all-time highs tomorrow? It almost seems like it's a given ahead of the fact, given how big this buy should be. But let's see what the number is, and then more importantly, let's see what the reaction is. If there's any universe, I'm not calling for this, I'm just saying, if there were to be any universe where the market reacts tomorrow, if we see as expected that there's going to be a massive bid that's supposed to come in, and the market reacts like it did 2 trading sessions ago, if there's any universe in which that can happen, it might actually be a huge signal. But I'm not calling for that. It's just something we should pay attention to. I don't think it's what's going to happen. It's low probability. Most likely what's going to happen is that huge bid's going to come in and it's going to bring us to all-time highs, to be totally honest. But if for some reason we don't, it's the same old story. When we should go higher, most of the time I'm talking about news when I say this. Usually I say it all the time. If there's news that comes out that should make the market go higher and it doesn't, a lot of times it's a signal for the other way. Or if there's news that comes out that should make the market or a stock go down and it doesn't, a lot of times it's a signal for the other way. And I've never seen that with like market structure before, but you know, it could be a kind of similar situation where if we somehow see the market not perform tomorrow, and we see tomorrow morning, as I'm expecting, that the data shows that there should be a huge bid, maybe that's a signal that we're actually starting to get kind of close here. Those types of headlines potentially help. Trump announces 50% tariff on Brazil. But again, I'm sure that's an August 1st deadline, so there's plenty of time for him to pull out again. I think that's pretty much all that I got. You know, I did a whole bunch of day trades today. A lot of the stuff that we talked about in the morning meeting worked out really well. Microsoft off 500 off the open worked out fantastically well. I did get chicken out on that, on the pullback to 500, and then it closed well. But it is what it is. I'll be honest, I don't really want to be putting on new swing longs right now. I'll take the trades as they come, but I don't really want to be putting on new swing longs. But that Microsoft looks so juicy through 500. You could have gotten in for very little risk on this thing. I think my initial buy was $500.41, and then I was even able to add slightly to that below that price. And then it, you know, worked fantastically well before pulling back. I got stopped out in this pullback, and then it bounced a few dollars after that. But there was just a bunch of stuff this morning that we were looking at. That AES worked phenomenally well. Closed at 13 quarters. That one worked pretty well. SoFi on the short side, despite the market strength, was still able to be weak. So we talked about SoFi as a short off the shooting star. Time is a bull's friend with this, but there is a lot of extension there. And there were some others that I didn't really look at throughout the day, like this BE, I know was a monster. We talked about that one in the morning meeting as well. And I think we actually even talked about NVIDIA long in the beginning of the day, but then that gave way, and that worked fantastically well off the open too. I didn't take that, but eventually it actually gave way to me shorting when I didn't think it looked right. So that is all that I've got. I'm happy to turn it over to you guys for questions. From Varun, if you have time, can you give an update on BABA and why so negative? I missed the coverage this morning and did not really see much on BABA specific other than the Chinese PMI. Yeah, I don't know. I feel like this is the third time I got asked this question today. So just repeat it. Alibaba is technically broken. So just stop looking at it. It's technically broken. It's got to get above 110, honestly, like 113 in order to look healthy again. I don't think it was you every time, Brew. Don't worry, buddy. You're still my buddy. It's got to get above 110 to like 113, I think, to start looking healthy again. So you got no business, I think, being long this stock right now unless you're really big picture about it and you're willing to build into it deeply as more of like a value proposition here, which is what I'm doing on a smaller position for Alibaba. Still in it. I recognize that it broke technically. I reduced my size when it broke technically. I switched to a much less aggressive game plan. But now my game plan that I'm using for this thing is very big picture. It's more kind of build in, build out, because I do think that there's a lot of value in this company. They have a phenomenal buyback. The PE is really low. It's interesting to see that a lot of the bigger Chinese tech stocks are not performing right now when the Shanghai index, I think, made like all-time highs or something like that. I think just today. but for whatever reason, these names are not performing with it. It just is what it is. But I still really do like the name, big picture. Are you still looking at NVIDIA's short side? Yeah. So I'm short NVIDIA overnight. Like I was saying before, probably a mistake. I just mentioned I got back in to NVIDIA when the buy imbalance came out. That was huge, and the stock still couldn't go up on it. To me, that was a signal that I probably just got shaken out here, and I was like, you know what, I'll just short a little bit and kind of keep it overnight and kind of manage it tomorrow based on that. But at the same time, I think I'm too early still. Fighting the systematic bid tomorrow, I think, is probably not the right move unless we were to close weak tomorrow. But if we close weak tomorrow, you could potentially press the short the day after tomorrow. So we'll see. At least you're shorting it, mindful of the consequences with a plan in place. Yes. Thank you, Rich. From Jerry, could you walk us through the thought process related to your NVIDIA trade, since it was counter trend to the entire market and it seemed to not break an important level when you entered? Sure. So NVIDIA looks phenomenal. In the morning meeting, I think I even called it out for a long versus 160. It broke out technically. Again, it looks phenomenal. But the extent of the trade was that for some reason, NVIDIA weakened out. There became like more of an institutional style seller, I think, that was weighing on this. Might even be Jensen Huang himself, because we know that there's supposed to be some insider selling from Jensen that's ongoing. And originally it was around here at this like 163.35. It couldn't get above it, and then that broke a little bit lower, and then it turned into like 163. So the Qs here had been really working their way higher at various points, and NVIDIA just couldn't do it. So all of a sudden, NVIDIA actually started showing some relative weakness. And when it broke lower here at 110, I was like, okay, this thing just broke some intraday support. It's starting to show some relative weakness. And I really began to short it. I didn't see it right away here at 110. I really began to short it on the 120 candle after I put in another upside tail and came right back down. But I couldn't get follow through. It seemed like every time this thing wanted to try to press lower, the market started to really uptick, and that was thwarting any potential downside in NVIDIA. And that's why, not fighting the market is so important, and that's exactly why I'm saying this might not be a good idea that I'm putting this trade on, because I'm fighting the systematic bid at the market level tomorrow. But it was kind of just based on that I was looking to short it. Originally, I was giving it to these highs up here, like this 163.38 area. And then when I put in kind of these two pivot highs above 163 that it couldn't crack, I lowered my stop to 163.03, which I think was basically like this high, and then I got stopped out of the position there for a small loss. I was able to a bunch of times like short in the 80s, cover in the 60s, short in the 80s, cover in the 60s, short in the 80s, cover in the 60s. That helped mitigate the loss, but I did still take a loss on NVIDIA when I got stopped out of it. What else? Hope that helps, Jerry. Yeah, pullback was aggressive for Microsoft for sure, but the market pulled back pretty aggressively too. From David on Starbucks. Starbucks, I entered long at 9:50 a.m. candle. I know that the trade failed, but I wanted to have your thoughts on it. Sure. So I remember communicating the Starbucks opportunity into the ADMA here on the 5-minute chart as it presented itself, and I remember in real time explaining why I didn't love it. And the reason why I didn't love it was because I thought that the market was going to pull back. And it's the same thing. I know that Starbucks was trading on some news, so it lowers its correlation to the market. We definitely like that, but I don't want to be fighting the market. Like the ideal situation would be, I think if the market's about to bounce and Starbucks is presenting this opportunity, that would make me like the trade significantly more. So again, the market itself is just one of our really important layers of probability that we want to be paying attention to in any trade. And why was I thinking that? It was just because of how extended the market was at that time. So you're trying to buy that dip into the ADMA on the 5-minute in Starbucks right as the Qs, and maybe Starbucks is probably more of an S&P stock than a NASDAQ stock. But the Qs are trading at 5:57 at almost 10 a.m. with the ADMA at 5:55 spot 75. the market was due for a pullback. Was I expecting the pullback that occurred like this? No. But a pullback to the 8 EMA or a space between the 8 and 21 EMA on this 5-minute chart, I thought made a lot of sense. That's why I was shorting the Qs there, right? I was communicating the short on the Qs. I communicated the short on the Qs off of this shooting star that had a lot of extension here at 10 a.m. Not sure if anybody got in that with me, but it worked pretty nicely. So, you know, the problem is, and the SPYs too, you know, the SPYs had a ton of extension at that point. So Starbucks, if you're looking at it in a vacuum, it's similar to that setup that we like. Stock has news, it price corrects to the 8 EMA on the 5, it creates a pivot, you're long off the pivot to see what kind of a bounce back you can get. That is the trade that we like, but if you're going to be fighting the market with it, it just lowers the probability of success, it lowers the reward profile of the trade. And it still worked enough where if you executed and got good prices, maybe you could have gotten your risk covered before the trade failed, which we always want to try to do. But otherwise, again, in a vacuum, I think it looks fine. But we never want to look at things in a vacuum. We always want to be looking at things in conjunction with their daily chart, in conjunction with the market, right? That's how we knew that SoFi yesterday was potentially a really good short through 2050, even though it's a bull flag on the 5-minute. Because the daily chart level extension actually made this have a higher probability of failure, made you not want to buy that, and in our case, actually shorting it. So, excuse me. I hope that helps. From Alex, why do you think the 200-day is useless on a 5-minute chart? Many traders consider it important, such as JR. I'd love to listen to your opinion about it. I just think it's too big. I mean, how many days is a 200-day on a 5-minute chart? I mean, it's just like, I don't know, just look at I just have a SoFi chart up right now for the 200 SMA on a 5-minute chart. It hasn't touched it in days, and I don't know, I've never seen it show any importance. It's pretty much the extent of it. I've never seen any usefulness from it on a 5-minute chart. I don't really have anything else to say beyond that. I think it's just noise. But if you look, as I say that, and I see that you're just a guest here or you're new here, so welcome. I'm also a big believer that the way is no way. That there is no perfect way of trading. There could be things that work for you that don't work for me, that work for me that don't work for you. A lot of that has to do with traders and their personality type and the way that they've developed their approach and their system and their edge in the market over time. So, just because I don't use something doesn't necessarily mean that it's wrong. It's just that for me, I've never derived any edge from that, and it's just noise to me on the small time frame. So I hope that helps. 78 5-minute candles in one session is a 200-day, so it's a little bit more than 2 days worth of data. Okay, thanks, Dave. From Dave S. From a sector perspective, computing hardware stocks surged collectively with more than 10 stocks, including Foxconn, hitting the daily limit per the Shanghai Index comments. Oh wow, cool. Is that bullish for Apple? I don't know. Aren't they moving? Did they move it all to India? Or is India Foxconn also, but just India instead of China? I don't know. From Liam, today at 12:50, there was a slight divergence with the TQQQ and the actual Qs, where the Qs wicked above the VWAP, while the TQQQ did not. UPRO also did the same, but had even more of a divergence. Would you honor the Q charts over the leverage ETF charts? Yes. Yes. I think that, so even if I'm trading TQQQ or SPXL, I'm trading the SPY and the QQQ. The levered ETFs decay, and that makes their technicals not as clean. You want to trade the technicals on the non-levered indexes and ETFs, not the levered ones, because the levered ones just get skewy and screwy with their decay. Cool, no problem, David. From Jerry, I find the 21 EMA and the 15 is very powerful as an additional support and resistance tool. Yeah, I like the 8 and 21 both on 5 and 15 minute charts a lot, respectively, as tools, for sure. I agree with you on that one. What else, guys? Anything else? No problem, Michael. From David L. You mentioned that you used to scout more earlier in your career and not as much now. Did that change over time from experience? It changed over time from a combination of experience and a combination of the market evolving. So, you know, I guess a couple points on that. One is the longer that I've been in the business, the longer my time frame has become, and I think that is a good thing from a reward perspective. Generally, if I'm in and out of something quickly, I want it to be because I'm taking a quick loss and I'm getting out of the way. But on the reward side, if you're exiting trades as soon as they're moving in your favor, I find that to be reward limiting. So I want to squeeze as much reward out of my trades as I can. So that means potentially trailing on different time frames, being bigger picture on it. It means that if a day trade closes really well in my favor and it's in the direction of a good-looking daily chart, to consider swinging a percentage of that position overnight to get even further reward for the risk that I already put on. So I, at this point in my career, find pure day trading, and I do some of it, but I find pure day trading to be reward limiting. So I'm not saying don't day trade, but I'm saying consider that when trades are working in your favor, very different when they're going against you. When they're going against you, take those losses, move on. But when trades are working in your favor, you know, don't be afraid to let them continue to work in your favor to really maximize that reward. And sometimes it means holding positions overnight. And that suits my personality better as well, being just a little bit bigger picture than just being a huge hyper scalper. When I was a newer trader and I scalped a lot more, I would stare at the tape until my eyes were ready to bleed. I remember, you know, my first couple months on the trading desk, and I didn't know anything at that point, but I remember within my first couple months, I was in like Johnson & Johnson, and when I was a new trader, we didn't allow traders to use stops. You had to manually exit your position. So I remember sitting there, and J&J was like 3 cents away from my stop loss, and I was just sitting there with my eyes staring at the tape and my finger on the market sell button, ready to press that market sell button the second it touches where my out, that's what we used to call it, not a stop because we didn't use stops, where my out was supposed to be, where I'm supposed to take a loss. So, and I had to go to the bathroom. and I'll never forget it. I must have sat there for like an hour and 45 minutes staring at this Johnson & Johnson in a summer tape with the market not even moving and having it be 3 cents away from my stop loss, and I really had to pee, and I would not let myself go and do it because I could have missed my stop. And you know, we used to just stare at the tape until our eyes bled. But it was a different market back then. The way that I was taught how to trade in 2010, I don't teach people how to trade that way because, one, I don't trade that way myself, and two, the reason I don't trade that way anymore myself is because it doesn't work anymore. When I was a new trader, I was taught basically tape reading tricks to be able to make money from. Front running large order flow and stuff like that. And it's why to this day I'm a very good tape reader. You know, Josh has given me a compliment in the past that I really appreciate, that I'm the best tape reader he's ever seen, which is great, except tape reading is, I don't want to say it's useless. It's not. It still provides an advantage at certain periods of time, but it's so significantly less important than it was back in the day that I don't really teach any tape reading tactics or techniques anymore. You know, if you truly fully master technicals and you want to start talking about the tape a little bit, fine. But otherwise, don't worry about the tape. Don't worry about the level 2. Learn your charts. Master that. Master your edge. And then, yeah, maybe then we can figure out some ways where you can execute better by having a better understanding of how tape reading works. But that's, that's how we traded. I didn't hold a position overnight, probably my first few years at T3. It just kind of was how it was. So just the evolution of the business over time. Hope that helps. Yep. From Michael, I'm backing up here thinking if we use the actual index to read and the leverage to trade, I would take I would take or lose based on the leverage side, decay or not. So then wouldn't it make sense then to read and trade the leverage, if that makes sense? So the leverage is just going to move it coupled with the actual index. So in like the one-off example that Liam mentioned, which probably isn't going to happen very much, usually the technicals between the two are coinciding pretty perfectly. But on a rare occasion where one's ticking above or below moving average and the other one isn't, I'm going to be looking at the SPYs and the Qs, not the levered ETF. And yeah, there's a good chance that my stop loss will be just based on the technical point on that levered ETF. But honestly, not 100%, not always. Sometimes I am still kind of trading manually and not having an actual physical stop in, and I'm waiting for the SPY or QQQ to do something in order for me to manually hit out of the TQQ or the SPXL. So, hope that helps. Anything else, guys? Going once, going twice. Have a great evening, everybody. If you're in the YouTube, give me the thumbs up. I'll see you all tomorrow.